Good morning, everyone, and thank you very much for joining me. This is the morning market review. It's Friday the 13th. My name is Russell Shoma, Senior Market Specialist at FXCM. My email address is r@fxcm.com. Just going to bring up our high-risk investment warning, and I'm going to bring up the commentaries disclaimer. Can I just confirm that everybody can hear me, can see me, and can see the screen? Hey, Reggie. Okay, excellent. Thank you. Hey, Anna. Okay. So we're not going to go for too long today, but I want to show you something which I think is quite interesting. It's a trade that on yesterday. I'm actually still in it. I want to show you how I traded it, and I think that's what we'll do just to end off the week. I'm also cognizant there's going to be, I think, a power cut in about 20 minutes or so, and my generator is giving me some issues. All right, here's our market commentaries disclaimer. All right, and we'll just take a look at market scope and trading view. I'm going to bring up trading view first. We've got two series here. The bottom series is actually the core inflation. This should say 5.7. I'm not sure why it hasn't updated. Probably got the wrong one here. Let me just double check. Should be the right one. All right, this is actually still needs to update, so we somewhere down here. Okay. The idea here is that we're under the 3-month moving average. Okay, we're under the 3-month moving average. If you take a look at the top chart, that's our median. This for me is the really important inflation series. It's the one that we've got to be on top of. It hasn't crossed below the 3-month moving average yet. Again, this hasn't been updated. The reason this hasn't been updated, so the bottom chart should have been updated. In fact, when I looked on the trading view earlier today, it was updated. So I think maybe there's something going on between putting it as your primary chart and your secondary chart. The median, the median inflation gets calculated by the Cleveland Fed. Okay, they haven't put it out yet. You can usually find it on their webpage, but then it gets updated in TradingView. I would expect it to be underneath its 3-month moving average. So we want to be on top of that next week. Okay, it's very important that that median inflation rolls over, because it's suggesting that the sticky items in that inflation basket are starting to give way to the tighter policy. So we must keep on top of that. And the reason we want to keep on top of that is we're going to go through to this this chart here, is because if the median is reflecting change, then the real rate will reflect change. And the real rate here, this is the daily. We've pointed out a flag previously. I'm not a big believer in measured moves, but what I like looking at in terms of measured moves is the directional bias. So the directional bias for the real rate is down, okay? And then we've got this NASDAQ chart in the middle. And then what I've done is I've put the correlation coefficient of the two underneath. Now, we talked about the correlation coefficient yesterday. If you want more information, go to our Telegram channel, and you can pick it up. Can you guys hear me? Shadrach's just saying he doesn't have audio. Can I double check? Can you guys hear me? Okay, cool. All right. So it's on his side. All right. You can see we've got a very robust inverse relationship here, minus 88%. In other words, it's moving up step almost at 88%, 90% almost moving in tandem, but in opposite directions. So if we get the real rate continuing to come down, which we should, if that sticky element is starting to give way, then the NASDAQ gets supported. Well, that puts the NASDAQ automatically on our watch list. Okay, that puts the NASDAQ automatically on our watch list. Now, I'm trading the NASDAQ at the moment, and I want to show you how I got into the NASDAQ because it's a slightly different entry. I haven't really spoken about this before, so you guys can tell me what you think about it. But it's not this one. It's this one. Okay, so what we're looking at here, okay, is the fast stochastic. It's just a standard 5-week fast stochastic. It's a percent K. There's no percent D on this, so we're only looking at the percent K. What we want to do is we want to get a directional bias on a primary trend basis, because this is more of a swing trade methodology rather than a day trade methodology. So we want to get the underlying momentum for a longer term trend. And that's really what the fast stochastic is used for. We're looking at this in terms of the absolute slope. Absolute slope is up, okay? And that's telling us, well, the NASDAQ is looking pretty strong in terms of momentum. That makes complete sense. Makes complete sense if we go back to the real rate, okay? Now what we're going to do is we're going to drop down to the hourly. What we do is we drop down to the hourly. I've got an RSI here. The RSI that we use is an RSI 10, and then it's calculated on the median, not on the close. It just smooths it a little bit. I don't think it will make a big difference if your charting software doesn't have median, but I use the 10 in the median. And then what I've done here is I've attached you can see there's no 30s, there's no 70s, there's no 20s, there's no 80s. I've taken out the overbought, oversold, and I've added in a Bollinger Band as an adaptive overbought, oversold. In other words, the volatility, okay, the volatility is going to dictate where the overbought, oversold is. And in an uptrend, that's important, because in an uptrend, you're never going to reach 20, you'll never reach 30 as oversold. In a strong trend, there's no ways. So that's what the adaptive moving average is. That's what the adaptive overbought, oversold does, and that's what we use this Bollinger Band for. I wanted to show you the settings. The settings would be a 50 and a 1.5 standard deviation. Okay, these are slightly different to what John Bollinger suggests in his book, but I find that these are better for my particular style of trading. So now I know. So listen to this very clearly. I know that the NASDAQ is moving up on a momentum basis. Now, it's not good only to use technicals, in my opinion. You want to kind of marry your technicals with your fundamentals. And that's what we are doing with this chart here. So we know that the real rate is moving down. We know that there's a very strong, robust correlation. And we saw yesterday that the CPI continued to roll over, the core CPI. Well, that's all looking pretty good in my eyes. Okay, so what was the strangest thing is I first tried to get in on a day trading basis, and I got stopped out very quickly. So if you take a look, it kind of went down, stopped me out on the day trading. But I was thinking, well, what's going on here? Why am I getting stopped out when the fundamental data is pretty good? And I looked at one of my swing systems, and I could see we actually had gone oversold. Okay, so we'd actually gone oversold. So I re-entered on the S1. I re-entered on the S1, okay, and now I'm holding until the stochastic. Now I'm holding and this is a very aggressive swing. Okay, I hold now until percent K crosses percent D. Okay, so now hopefully it's going to be a decent swing here. The exit is still stochastic based. It's still based on momentum. It's when percent A, percent D crossover. You must put on a stop loss. You must use risk management. Okay, because of course That's just prudent trading, right? But the idea now is, watch this. Let's now take out yesterday's pivots, and let's just take a look at today. Okay, and there's an opportunity here. There was an opportunity here earlier to get in on the next oversold. Can you see how it's adaptive? Can you see how it's oh, sorry, it's just I'm just going to have to bring that up again. Bear with me, it's shut down. But the whole idea is that the Bollinger Bands are effectively adaptive overbought, oversold. So you can't wait for it to hit 30. You can't wait for it to hit 70. In a robust uptrend, it's not going to hit those levels. They're too far away. Whereas the Bollinger Band, and this is straight. So John Bollinger does make provision for using Bollingers in indicators. It's just our settings are different to his. Okay. And you can see that there was a second opportunity to get in. I did not take the second opportunity, okay, because it would go against my risk management. As far as my risk management goes, I can't add to this position. All right. So the idea here is, if I had split it into twos and I put in sort of a half here and then waited for the next, I could have got a half here and sort of had a smoother, perhaps a smoother entry. But the idea here is you wait for the pullback, again a dip in the uptrend, and then you wait for the swing. And that's effectively how I got into the current position I'm in. Granted, this is a very fast in terms of the exposing you guys to the system. We're going to have to do a more concentrated educational webinar on this, but I'm going to hold back on that because I want to, just like we did the day trading at the end of last year, I want to do the swing trading this year. So there's not much more I'm going to sort of say about it at this stage, but it will be something that I will release sometime during this year. All right, that's as far as I want to go today. I just wanted to, I thought it was a good opportunity to just to let you know what happened. So the day trade stopped out, swing trade, I'm still in, okay. Okay, so the day trade, so Anna's asking about the day trading link. What I can say is in the next week or two, Anna, we're going to be releasing our half-yearly report. It's been written, it went through to compliance. There is a page in that dedicated to driving traffic or directing clients, so to speak, to the day trading workshop. Again, when that comes out, you'll be able to click on the link and of course study the lectures. Wait a week or two if you still sort of don't have it after that. Let's chat. But I suspect it's coming out fairly soon. I'll give you the exact date when it's going to come out tomorrow. I'll just speak with the marketing guys. The report, an email will be sent to everyone, and it won't be sent to everyone. That email, you'll have to register for it. Okay, so the report's not going to be sent. So there's going to be two elements to that email. Number one is going to be the half-yearly report. We've changed it from a quarterly to a half-yearly. The second is we're doing a 2023 Outlook webinar, Nick and myself. That's going to be marketed in the same email. It's going to go out within the next few weeks. I just need to double check the exact date for you. Does that answer your question? So it does depend on geographical location, but not to the, I don't think the day trading workshop will be limited. Bitcoin will be limited. So UK, of course, cannot get access to cryptos because it is a because it was a compliance issue. Yeah, I'll need to double check. I know what you're referring to. I know what you're referring to. Let me just double check on that. I actually don't want to misinform. Let me. The report. There's two reports. The one report is for the UK, which is going to exclude Bitcoin, and there's a second report, and that's for every region that allows exposure to cryptos. All right. Any other questions there? All right. So I'm going to end this webinar, I think, over here. I'm going to put this on. I'm going to put this onto the Telegram channel, so you, of course, can go over the subject again. And I want to wish you guys a great weekend. Thanks, Howard. Anna, thanks very much. And we will touch base again on Monday morning. Have a fantastic weekend, guys.